next year is a critical year for the key parts of the 2017 Tax Cuts and Jobs Act. If Congress does not change the law by the end of 2025, many of the tax provisions will revert to 2017 levels, and individual taxpayers are going to be facing higher taxes most likely. So we want to dive into some of the potential scenarios and find out how you as financial advisors should prepare. Erica York, I want to start with you because as senior economist at the Tax Foundation, you've analyzed Donald Trump's tax plan, and you can tell us, should advisors anticipate tax policies changing early in the president-elect's term? Or if so, which ones should they be most likely to be enacted and which ones have very little chance?
There's a very high likelihood that tax policy will be changing with full Republican control of Congress and Republican control of the White House. That opens up the legislative tool of reconciliation, which does allow for tax policy changes and is how the 2017 tax law was passed in the first place. The big question is what tax policies are on the table and how big do deficit concerns weigh on lawmakers as they extend or even make permanent these tax cuts. Just the expiration of the 2017 tax law, extending that, will reduce revenues by more than $4 trillion over the coming decade. And on the campaign trail, Trump outlined trillions of dollars more of tax cuts, which makes the budget math really hard. I do anticipate we see some continuation of the TCJA provisions, potentially additional tax cuts on top of that, whether it's something on the corporate rate, something for domestic investment, as well as something like exempting tips from income tax in a limited way. All of those are on the table.
A lot of advisors, they're on the chat, they're talking about tariffs and taxes are really important to their clients. You are a certified financial planner as well as a certified public accountant, and you're dealing with this uncertainty about how President-elect Trump's tax proposals are going to come to fruition. How are you planning for the different scenarios among your clients?
A great question. So we have been planning for the sunset now for 3 years. And so mainly on the estate planning side, right? What things do we need to do to lock in those elevated levels of estate tax exemption? So putting types of trust and vehicles in place to allow us to do this generational wealth transfer before the exemptions drop to the pre-TCJA levels. The good thing about the change in administration is that now it may not seem so urgent. However, having said that, I think we're still planning to put all of the ducks in a row for us to continue to the planning that we were planning to do, but not make it such an urgency. One of the things that I am focusing on, as Erica alluded to, right, we may see some of those provisions extended, but not all. And something that's very, I haven't heard anyone really talk about this, is the itemized deduction phase out. No one's really talking about whether that's going to be part of the extension, but if that comes back, then we can see a huge stealth tax. Even though we're talking about maintaining all of these low income tax rates, this is effectively a stealth tax by having anyone whose income exceeds $300,000 having all of their itemized deductions pretty much sliced and 80% eliminated. So one of the things I'm focusing on is anyone who could potentially be affected not only by an estate tax change, but also charitable giving. I have very charitably inclined clients, so we're talking about front loading and taking advantage of the current laws just in case those things are not extended.
Will President-elect Trump's proposed tariffs offset the cost of the tax cuts?
Even if you take the most aggressive tariff strategy laid out by Trump, 20% universal tariffs plus 60% or higher tariffs on China, that falls short of paying for full extension of the TCJA. And when you factor in the economic effects of retaliatory tariffs, it's also likely to offset the economic benefit of continuing the tax cuts. Now, there's a lot of political uncertainty over whether Trump has the authority to permanently and universally impose tariffs. We're likely to see tariffs increase in a narrower sense, particularly higher tariffs on China, maybe higher tariffs on certain categories of goods or other trading partners. But there's a lot of uncertainty over the authority to impose a universal tariff. And even if he did do it, it would fall well short of the revenues needed for all of the tax cuts that he campaigned on.